From Los Angeles, TraderInsight.com presents Dr. Adrian Manz in the war room and at the helm with today's look at stocks and sectors on the radar.
For TraderInsight.com, I'm Adrian Manz, and this is Stocks and Sectors on the Radar for Friday, April 3rd, 2009. On Thursday, Dow Jones Industrials up 216.5 to close at 7978.08. We had 2,718 stocks advance, 393 decline, and NYSE total volume of 1.87 billion shares. That price action puts the Dow squarely up inside the bottom of the Dow box. If we get some good economic numbers on Friday, we ought to be able to push even higher again. Of course, the reason that we got up where we did today, factory orders came in very strong. Jobless claims were still on the lousy side, but factory orders in concert with the FASB coming out saying they're gonna relieve the banks of the burden of having all that mark-to-market accounting stuff. They're going to relax those mark-to-market accounting rules. That's not really great news if you're an investor in the banks, but it's good news if you're a banker or if you're trying to figure out where this market's going to go. Friday, of course, we're going to have employment situation and the ISM non-manufacturing number. So anything could happen Friday, but I think that the higher we push into this range here, the better off the broader markets are going to be, particularly if you are on the long side. Let's take a look at the rest of the indices. S&P 500 up 2330 to close at 834.38. 850 is going to be kind of a magic number. We hit 850. I'm looking for 900 on the S&P. NASDAQ 100 up 41.79 to close at 1294.30. And the NASDAQ comp up 51.03, closing at 1602.63. VIX didn't do much today, opened and closed right at the same number. As I've said before, that's not great if you're a trader, but we'll see what happens going forward. I'm assuming that this week was kind of a wacky week in the market, and we're probably going to see this thing start to behave a little bit more normally going forward. Now let's take a look at what happened to the stocks we had on the radar last night, and then we will take a look at some interesting candidates for Friday's trading. Of the stocks on the radar on Wednesday night, only Nalco Holding Company, ticker symbol NLC, didn't gap on the morning. This gave us a straight up around the horn entry on this one. Remember, yesterday we had talked about a $14.12, $14.15, $14.17, somewhere in there as an entry level on this fastball expansion of range, expansion of volume. That stock did present that entry opportunity intraday today. I should note that those other ones were also very tradable. But a lot of you are working from the book. You're working from around the horn, A Trader's Guide to Consistently Scoring in the Markets, and you're trying to learn that methodology. And I think it's a very good place to start to say, I'm only going to look at the setups if they are pure, if they really represent what's in the book. And then later work on how do I get more aggressive? How do I work with some of these pivots? How do I work with some of these alternative entry strategies? So let's take a look at this one intraday very quickly here. Not too much of a challenge, right? Except that I'd like to show you why I targeted the 1441 level as a profit target, an initial profit target. That's not to say you're not going to trail profits if you can hang on to them, but in this case, look what happened, right? We got the entry right off the open. The stock opened up around $14.20 a share. If you grab it there, you grab it there. If you wait for it to slip back down again and get into that 14.15, 14.17 range, all no problem, right? Never got down anywhere that I would be looking to stop out of this thing, no matter where I entered on this first bar. Then 14.40, 14.41 represents a move just above that pivot. When we see this burst up to 14.50 followed by a bar that opens sort of lower than that high and then tries to trade up and trades lower again, good indication to take some money out of it, take some money off the table. Boom, comes back down again. Well, it doesn't get back down to the entry price, so not another trigger. And if we would have stuck with the position going in, we could have got up around 14.70, but there's of course no way to tell that, and there was some oscillation around this pivot line, this resistance line. That's to be expected. Nothing you can do about it. That's trading, folks. It's you pulled 30 cents out of the market per share. That's actually a lot of money for a 5-minute move, I would say, and not half bad for something you're getting out of a free video every night. So Keep an eye on these. Keep an eye on these kinds of setups. Keep watching those pivot lines. Get some ideas about how to trade around them. And let's take a look at what we've got on the radar for Friday's trading. So let's assume then for a moment that FASB easing, that FASB relaxing of those mark-to-market rules is going to benefit the banks, and is also going to cause the banks to lend some more money or ease up on the lending requirements. That's going to benefit the home builders, and in the home builders, I've got D.R. Horton on the radar for a Friday long side trade on a continuation of this line drive move that we saw in Thursday's trading. Now, that line drive gap was a reaction to the FASB news, and any trade above $11.25 a share on Friday is going to have me interested in a long side continuation entry with a probable target, probably kind of on the tight side again, $11.63, somewhere in there. Now, the stocks in the sector that didn't benefit, of course, there's a lot of home builders, right? We've got Beazer, Centex, Lennar, Pulte, Horton, Meritage. Those guys are all players in this. They're all frequent flyers on my stocks and sectors on the radar, as well as on the trading service. But look at what Lennar did today, right? Backdoor slider setup on the downside. If I see trade below $7 and let's say 702 all the way down, maybe 695, 697, somewhere in there, I'm going to be looking to short this stock with a potential profit target down around $6.45, $6.50 a share, somewhere in there. Why am I looking to go against the obvious economic impact of that monetary easing? Well, it looks like this stock is not really benefiting from that, right? We had the rest of the group sort of get a nice pop, and we had this stock sort of sell off into the news, close kind of flattish over the last 3 days. But look at that big fastball move to the downside that we had 2 days ago. That's indication to me that there's probably going to be more selling pressure on Lennar. That's ticker symbol LEN, and I'll be looking at the short side on that one on Friday. Now, some other stocks I've got in the industrials. I've got the airlines here. I've got Copa Holdings. This left an infield fly set up on Thursday. Trade below $31.10 on CPA. Going to have me interested in a short side entry with a probable initial target somewhere down in the $30.70 per share range. Now, that could very well be extended lower. These infield fly moves can have pretty dramatic follow-through. If we get a broader sell-off in the market, we'd be looking at $30.50 as the next bump, and then all the way down to $30.05 on the bigger move. Now, it used to be the case I hold those infield fly moves over for a few days. As you know, the market's been very volatile. I'm not holding anything over. Whatever I can get out of it on Friday is going to be what I'm looking for, and beyond that, I won't be taking any multi-day positions in most of these things for a while. Then in the chemicals, we had a line drive move in PPG. That's PPG Industries Incorporated, ticker symbol's PPG. And on this one, if we get trade above $42.50 a share on Friday, I'm going to take a long side entry with a potential profit target around $42.97. $43.05. We'll see if if PPG manages to follow through. And then finally, in the capital markets and the financials, an interesting lack of enthusiasm today. Greenhill and Company, ticker symbol GHL. This one left a sort of a de facto double header setup, and it unwound the fastball price action that it had in Wednesday's trading. If I see trade below 73.75 all the way down into 73.65, 73.68, somewhere down in there, I'm going to look for a short side entry on this one with an initial target down around $73 a share. Get us down into sort of the support and resistance, this natural support and resistance that we see on the daily chart, as well as the open of the day that created that fastball move on Wednesday. So, if you have any questions, shoot me an email, adrian@traderinsight.com. Use protective stops on every trade, and have a great trading day on Friday.